Good morning, people. It's currently 5 a.m. for me, and I'm trying to get this video out for you lot. I've had a heavy night of drinking, but I'm still doing this. In this video, we're going to be assessing where the market, the US market in particular, could potentially move next week. We're going to be trying to understand what the indicators are pushing out, where the momentum lies. We're going to be looking at some of your favorite stocks and if they potentially could break out. And furthermore, we're going to be understanding if it is a good week in general macroeconomically and what exactly we should be looking out for. Before I get into this, I'm not a financial advisor and none of this is financial advice, and what I do say here is just what should in theory happen according to my systems and the indicators. That doesn't really mean to say that that is particularly what is going to happen, especially in the current macroeconomic climate of the US. Anything can really happen in theory. So to kickstart this off here, the S&P has done incredibly well last week, with it being up approximately 3.4% at its close on Friday. This marks a 9th consecutive day of gains, with the longest win streak since 2004. And here we can see that they are into, they're currently in a short position on the MACD indicator, but this does look as if it is going to open into a long position within the next couple of weeks, which is obviously incredibly bullish. And if we look on an exponential moving average, we are above all of them now, just barely below the 100-day moving average, if not tickling it a bit. And on the RSI here, we are yielding a result of nearly 60, indicating that this is starting to become slightly overbought. This could potentially slow down, and I do think it would need to slow down for it to avoid an abrupt sell-off. Of course, it won't be the only factor which would lead to an abrupt sell-off, but it would definitely help contribute to it. But in times like this, with a bounce back like this, I do feel as if it is somewhat justified to see the RSI climb up so high. So what has actually led this recent rally? Well, there has been strong job reports within the US, as they added 177,000 jobs in April, surpassing expectations and signaling economic resilience amid the trade tensions. Which, if you are a regular viewer of this channel, you will have known that I had said that this is going to be coming out, and this is obviously going to be something in which we need to be positive for the US, as it is obviously such a fundamental part of the reason why Trump is doing these tariffs, to drive jobs, and to see jobs rise in April really boosts the fact that they are working. Furthermore, there was a robust earning in the US last week through major tech firms as they bolster investor confidence. Notably, Microsoft Cloud and AI services drove a 10% surge, whilst Meta gained nearly 9% due to its AI initiatives. And of course, there is now trade optimism within the US and China space, as there are reports out of Beijing that might indicate that there are trade talks potentially going ahead with Washington. As I can't remember the quote that now, but I did see that they said that they can fight to the end, but there's not really much point. So I think that's exactly what most American investors have been waiting for, basically for both parties to basically say that this is now getting ridiculous. I know this is on Beijing's behalf, and we would like now to see that on America's behalf, and we would like to see this really continue and prove that this can be sorted out. So what are the key things you should be looking out for next week? Well, potential Federal Reserve policy and interest rates, as the Federal Reserve maintained its benchmark rate at 4.25% to 4.5% in 2025. And futures markets anticipate potential rate cuts later on this year. Obviously, it's not going to happen next year, so don't expect that. But late summer, we are expecting potential rate cuts, whether that be just because of pressure from Trump or because the Fed actually think that it's something in which is necessary. That's for you to decide. Of course, it's going to be key to watch trade policy developments, as President Trump and his administration have shown signals of softening the tariff stance, as I mentioned earlier, which is obviously fueling market optimism. However, many unexpected changes or escalations within these trade policies, especially concerning China, could definitely impact market sentiment if anything was to come out next week regarding this. Of course, we need to watch the economic indicators, as the US economy has contracted by 0.3% in Q1 of 2025 so far, primarily due to the trade disruptions. Investors will be attentive to upcoming economic data releases to assess the risk of potential recession, as the IMF have said that it is now at a 40% chance of a US recession. And of course, finally, it's going to be key to watch the US big tech companies and just the US market in general release their earning calls, as it is going to be very fundamental to see where the markets are actually going to be moving in the next couple of months and what their outlook is with the tariffs in mind. But with that being said, it is important to note now that the PE, the Schiller's PE for the S&P is definitely climbing back up now, which is not what we want to see. It basically indicates that the markets are still overvalued and earnings aren't really catching up with this recent hike in price of the last 2 weeks. So it's definitely something to keep an eye on. And for me, that's one of the main indicators I look at when assessing whether or not the US market looks to be fairly or undervalued. And right now, with it climbing back up, it could potentially signal that it's looking a bit overvalued again. Okay, so now we're going to be getting into a section where I look at some of your favorite stocks and potential breakouts for next week. We're going to be going over my breakout indicator in a short while, but for now, let's start off with NVIDIA. So NVIDIA is entering next week with a lot of positive momentum, closing at $114 on Friday, marking a 2.5% gain for the day. NVIDIA do, of course, have their earnings set to come out on the 28th of May, so it is a few weeks away, but it is obviously going to drive a lot of hype in the coming weeks, potentially, of course. But I do think if these trade escalation and tariff wars don't get basically sorted out in the next couple of days, then it's going to see the outlook basically being a bit bearish. On the MACD indicator, it does look to still be in a short position, but obviously with this previous momentum, positive momentum, we can see that this could close up into a long position shortly, but I don't think that will be within the next couple of weeks, and I think it will mostly be driven by the hype surrounding their earnings, as of course their earnings will always do incredibly well at NVIDIA. So on my breakout indicator, NVIDIA is ranked at 39th out of 109. That might sound relatively bad, but it is actually still ranked as a high potential for breakout on the breakout indicator. I have never actually seen any indicator of mine projects next week to be so strong. I've never seen so many yellow indicators is what I'm trying to get at here. So just off of this alone, we might see a lot of momentum carry through to next week. Furthermore, I have an intrinsic value set at $185 on the high side and $100 on the low side for NVIDIA, with NVIDIA now being at around 114, 115. It definitely looks as if it's still got some sort of room to run within the next couple of years, maybe not a massive amount, and I have actually downgraded NVIDIA in the last couple of months. So with that being said, it's something to keep an eye on. It's definitely a stock in which could go back up and it could go quite ballistic at some point, but right now I do think we're going to see a bit of modest growth or just sideways action. I really can't imagine that we're going to see NVIDIA sell off too much more from here. Of course, it can happen with the current state of the American economy, but I would be surprised. So now we're having a look at Tesla. Tesla is actually in a long position on the MACD indicator, indicating that this currently has momentum on a longer scale, and it's looking as if it is a strong buy going forward. It is ranking at 57 on the RSI, indicating that it's in relatively safe zone at the moment. So it could potentially be a good stock to buy, especially if you want to momentum trade it. But for me, I think Tesla looks massively overvalued at these levels. So according to the analysts, Tesla is actually ranked as a hold at the moment, and their growth is projected to be basically staying where they are. There is a high of 146 over the next 12 months and a low of 115, but the mean averages out to be 189, which is basically where the current price is. Furthermore, like I said earlier, I think Tesla looks massively overvalued. On a Graham's formula and a discounted free cash flow analysis, I've basically concluded that Tesla looks overvalued, and especially when they're at a PE of 154. But on the high side, I have a valuation for Tesla only to be at $31, and on the low side of 21, with a 9-year growth projected at 22 on a discounted free cash flow. Furthermore, I'm also yielding a result of 11.32 on the breakout indicator, indicating that they could potentially have a high amount of growth yet to come, but they are down on their volume within the last trading day, which is not something in which we'd like to see. It basically indicates that growth has slowed down quite significantly for Tesla, indicating that we could potentially see a sell-off, and maybe it could indicate that the RSI might claw back down to, say, a 40, or maybe potentially even all the way down to like a 35 area. So now we're going to be looking at Palantir. This is a company in which is now above its RSI, but it pretty much always is. It's an amazing company, but it is definitely overvalued in my opinion. And if you are looking for a momentum stock, I know intrinsically this looks massively overvalued, but this is probably one of the best momentum stocks on the market now, at least, and probably for the next couple of weeks by the looks of it. So Palantir are in a long position on the MACD indicator, and they are of course going to be above all of their exponential moving averages, with all of the support being way down here. It's looking as if this just has the momentum to fly up to the moon at this point. They are ranked in at a hold on a analyst point of view based off of 25 analysts, and the price target is set of a high of 125 and a low of 18. When we're currently at 124, it looks like there's no room for growth on a price target basis, but again, the momentum could just carry through for Palantir. As Palantir are ranked at number 1 for me at the moment with a massive result of 28.81. I've actually never seen a result that high on this indicator. A lot of these are really high. I would say I've not seen anything above a 14 before, so half of these look to have a lot of momentum carrying forward into next week, but Palantir definitely takes the number 1 spot apart from this here, which shouldn't be here. But it's looking to be a great stock to momentum trade, but intrinsically it's definitely not, as we can see when I can find it. As we can see here, I have an intrinsic value set on a high side of $8.59 and a low of, I said that wrong, I have a high side, set of $11.13 and a low of $6, with a discounted free cash flow analysis for 9 years growth, putting this in at $83. This stock currently being at $124 and having a PE of 614 looks massively overvalued. There's no denying that. If you hold Palantir shares, I don't even think you can deny that at this point. But yeah, fantastic company, and it does look as if it's just going to continue to climb up over the next week. So if you are holding Palantir, despite it being overvalued, I would continue to hold, because momentum within Palantir is just ridiculous. And let's not forget to mention that they do have their earnings coming up on the 5th of May, so which is Monday. So do keep an eye out for that. It's going to be quite a big earnings report for them, and they shouldn't in theory be affected by the tariffs too much. Alright, so moving on to SOFI Technologies. This company has done incredibly well in the last week as well, but they also fell straight back down. They had their earnings report and they did a triple beat. They did incredibly well, but since then they have fallen back off. They are actually now just barely into a long position on the MACD indicator, so we could potentially see a bit of momentum for SOFI in the next coming week, but on an exponential moving average, that we can also see that they are above all but the 100-day, which is incredibly strong. On a breakout indicator, SOFI are ranked at 17th at the moment, which is incredibly strong, and they yield a result of nearly 16, which is incredible. They are down on their volume difference, which is not ideal, but they are on their moving average, which is pretty much ideal. That could indicate that we are going to see some early growth next week, but it could also indicate that if investors don't catch on quick enough, then we could see a sell-off. I do have SOFI to be massively undervalued, and I have upgraded it in the last couple of months. I have an intrinsic value bullish set to be $146, and on the bearish side to only be set at 74, which is massively above where we currently are when I did this, which was $11, and I think from memory now it's around 12ish. Yeah, it's 12.70, so it looks to be an incredible buy just intrinsically, and I do really believe in SOFI. I think they are an incredible company, but they are very sensitive to what's happening with interest rates. So it's definitely a company to keep an eye on next week, especially as they are now just on that moving average, which we can see on the 100 here. It doesn't actually show for the 50-day on here. It does to an extent, but we would like to see this potentially rally next week. But realistically, is that going to happen? Possibly not. It's not going to rally up, I don't think, more than 10%, but I would like it to. I do think this company is massively undervalued. So finally, we're going to be looking at hims and hers. I don't want this video to go on for too long. I mean, for me right now, I woke up at like 5:30 in the morning to make this video for you guys, and I'm very tired. So looking here at hims and hers, we can see that they do have their earnings coming up on the 5th of May, as well as Palantir. So it's going to be a big day on the 5th. We have seen them climb up a massive amount in the last couple of days. They are now at $40, and I do actually think this potentially could be too high. I have an intrinsic value set on the bullish side for Hims and Hers, and I have downgraded them in the past to be set at $43. When they're currently set at $40, it indicates there isn't much room to run, and that is the bullish side. When we look on the bearish side, it's 23, with the mean being 33, indicating that I don't think it's fair to say that they should be going too much higher than $40. Obviously, they have done in the past, so the resistance isn't exactly there. I do think we're going to see a bit of resistance here at $44, but I wouldn't really want to see it go too much. It sounds weird, but I wouldn't really like it to go too much higher than that because it's not that sustainable in the short term. But it's definitely a company to watch next week. A lot of these companies are going to see incredible or potentially bad outlooks next week when they assess their earnings, but it will only be something in which time can tell. But I think generally the market is looking to have a potential bullish breakout next week just with momentum alone. As you can see here on my breakout indicator, it looks to be a good week. If you are a keen watcher of this channel, you'll know that Celsius has been number 1 or number 2 for quite some time, and now you can see it's all the way down in 108th as the market has now just surpassed them. They had a lot of momentum during the trade tensions, but now that's starting to ease. We're seeing a lot of these big tech companies take its place. So I'm going to end this video here. I hope you have enjoyed it. With that being said, I'm not a financial advisor. None of this is financial advice. If you could leave a like and subscribe, that would be greatly appreciated, as these videos take a lot of time to record. And right now it's like 6 in the morning for me and I'm very tired. So with that being said, I'll see you for the next video.